Follow us on Twitter at Your Financial QB. We're breaking down the one big, beautiful bill, tax and financial implications for estate planning, your own individual taxes. A lot of people have talked about the no tax on tips, the lower standard deduction. There's a lot of individual tax provisions. We'll break it down right now. Number one, it makes the expiring rate and bracket changes permanent and increases the inflation adjustment by an extra year for 10, 12, and 22% brackets. It makes the standard deduction increase permanent with an enhancement starting in 2025. So in 2025, if you are a joint filer, the first $31,500 is non-taxable. $23,625 for head of household, $15,750 for all other filers. It's a massive win from a financial planning perspective if you're looking at doing Roth conversions. So for example, if you make $100,000, the first $31,500 is non-taxable. So you're only paying tax on about $68,500. So what you could do is bracket fill up to the next bracket, and you could Roth an extra 30, 40 grand a year in that 100K example without a massive tax hit, because you would not go into the next bracket. It makes the personal exemption elimination permanent, and it temporarily adds a senior deduction. So there was talk about no tax on Social Security, and it temporarily adds a senior deduction. So Jim, you may qualify. $6,000 extra deduction. How old do you got to be for that? We know? You might be too young for that. Adds a senior deduction of $6,000 for each qualifying individual. So in that example, 31,500 married. Then you get another six. So you're not paying tax on the first $37,500. But then it phases out when the modified adjusted gross income exceeds $75,000, available from 2025 through 2028. So that's what Trump got instead of no tax on Social Security. So he got no tax on tips, which people thought was a joke. He got no tax on overtime, which people thought was a joke. He did not get the no tax on Social Security because the budget hawks thought it was too much. It makes the tax credit for having a baby it's just for having a child, $2,200. You also get the baby account if you procreate after the bill was passed. So people might be having a lot of fun this evening. If you procreate this evening, you get the $1,000. Do you get the $1,000, or does it have to be 12 months after? It's something strange, but it's $1,000 in an account for your new baby, Jim. Make the $750,000 principal limit for the home mortgage interest deduction permanent. So the first $750,000 of mortgage interest is a write-off. So if you get a mortgage of $1.5 million, only the $750,000 is a write-off. I think $750,000 though, I think that's kind of low, right? In today's bloated real estate market, I think they should have made it $1 million. But who am I, right? I didn't run for anything except dog catcher. Temporarily increase the cap on itemized deductions for the SALT tax to $40,000 and increase the cap by 1% from that level through 2029, subject to a phase out for taxpayers with incomes above $500,000, then reduce the cap to a flat $10,000 thereafter. This will create a boon for trust and estate attorneys as they create various entities to siphon off that deduction. So let's say you have somebody who makes a lot of money. Let's say they make, $1 million a year. What they do is they have these trusts own pieces of their business, because generally people set them up for their kids, so they don't get income. The child gets income, but let's say you have a business owner making, I don't know, $1 million a year. $500,000, you don't get it. But what you do is you kind of create, you have your company owned by 3 different trusts. If you had 3 different kids, and you could own 25% of the business or 50% of the business or 49% of the business, and you actually get this benefit of $40,000 for 2025 and thereafter. It makes other changes and limitations to itemized deductions permanent, including the limitation on casualty losses. Say your house gets burned down or something. Termination of the miscellaneous itemized deduction, except if you're an educator. And then it has the P's limitation on itemized deduction, which is basically if you make over a certain amount, you can't itemize. And certain moving expenses, except for active members of the armed forces and members of the intelligence community. So if you, Jim, join the CIA and then move to Quantico, you can get the deduction. But if you work for me, you don't get it. Limit the value of itemized deductions to 35 cents on the dollar for taxpayers in the top bracket. It's kind of dumb, but so basically what they're saying is this is sort of like that P's limitation. You only get a deduction up to 35 cents a dollar. It should have been up to 37 cents on the dollar since that's the highest bracket, but again, these things don't necessarily make sense. Just the law. It makes the increase in the alternative minimum tax exemption permanent, and it reverts the AMT exemption thresholds to 2018 levels, and then it indexes for inflation thereafter. So AMT, not as bad as it used to be, but still there. If you make over $500,000, if you're single, million, if you're joint. It creates a floor on itemized deductions for charitable contributions. And it creates a permanent $1,000 above the line deduction for charitable deductions, for charitable contributions. $2,000 for joint filers. Repeals several Inflation Reduction Act green energy tax credits primarily aimed at individuals. Darn, we should have done that solar thing, Jim, with the Biden bill. I lost it. It's gone. It's not as good as it used to be. So that's why Elon was really annoyed. Such as electric vehicle and residential energy efficiency credits. Why was that removed? Some say it was due to the fact that Trump hated the energy efficient dishwashers. They aren't really good anymore. Like I have an energy efficient fridge, makes 12 ice cubes every 12 hours. 12. I have to buy another ice cube maker. Is that crazy?
Nuts.
You have any questions on this, Jim or Rich? Comments? Are you silent, Rich?
I'm soaking it all in. I am just in a sponge.
There's a lot here. The big, beautiful bill. Does he like bees? I like...
Could end with a BS too.
Yeah, B. The big, beautiful bill repeals several Inflation Reduction Act green energy tax credits, either after 2025 or within a year of the laws enacted. So this is kind of cool, because what this makes me want to do is get the energy efficiency stuff now, get the new solar panels now, and then they're not going after. So you got to get it now.
We're gonna get it now?
I don't know though, because here's where I think it's good. With the new bill, you can get 100% bonus depreciation if you buy things for your business, right? So what's kind of cool, if you do it by 2025, you get the green energy tax credits and you get the 100% bonus depreciation. I don't think people realize that.
Ooh,
So
then we should do it.
maybe we should do it, but it's exciting. Temporarily makes up to 25,000 of tip income deductible for individuals in traditionally and customarily tipped industries. So that would then exclude you from getting a tip, Jim.
25 grand is the cap.
But what's the difference between a tip and a bonus, though? Right? Hey, get a tip. I guess it would be like if you're a waiter, waitress, car. I mean, here's the thing: a lot of people didn't pay tax on tips anyway, so it's like
They never did, I don't think.
They have amnesia when it comes to filing their tax returns. Tips? No, it's just my $2 an hour.
But you notice how every store that you go into, they ask you, you want a tip.
Yeah, here's a question.
we've done a whole show on that.
Yeah.
Yeah, I hate
I'm
that.
tired. I'm tired of that.
How
Do
about
they
I go
call you
into
cheap when you come in?
I go into any of the, Jersey Mike's or any of the
Yes,
stuff,
that's another-
and
that's the thing.
register, and it says you want to add a tip.
Well, that's your job.
It's like and they're like looking at me with puppy eyes. It's
Never.
like I feel
Never
like
give 'em a tip.
okay, $2.
You give them a tip?
Never
I
did.
normally do because it's
I do
don't know,
too.
I feel bad.
No.
I do
It's,
too.
Good
They're not-
conversation.
Well, that's because you have a heart. Jim, apparently.
no, Jim has
Jim is
That
Jim on a whim.
of it. A waitress, yes. Waiter, yes. They're
well
schlepping your food around.
yeah, and they're only
But
making
these guys, that's
minimum.
what they're doing.
But
They're
make it a
just-
$20 sub, nah.
No, they don't.
But
need
that's
a
why
tip.
they spit
That's-
in it when you're there. Does it taste a little extra funky?
And here, well,
I
you know
would-
what? One thing I will
Or if
say,
they make you coffee, like you're paying $8 for a coffee.
and you got to tip it.
A
too.
No,
latte,
that's-
you know.
no tipping on the
By
coffee.
the way, if you don't tip in Hawaii, the coffee people, they get nasty. Like it makes your whole vacation.
Next time you go, why don't you bring some coffee back for us?
Josh, when you
Coffee's not that
give
good.
Josh, you give the tip when it comes to register, right? Do
What do
they
you mean?
acknowledge that you give the tip?
No.
No, they don't, because I always say, well, I'm going to give you something. Because you know how many times I've done it and they didn't even, I don't even know if they know until the end of the night.
Yeah, maybe I should say.
I always say, well, I'm going to give you a little something. And then they say, oh, okay, thank you. Because, 9 times out of 10, I did it and no comment. I'm like, well, you're going to say thank you? I don't even think they know.
So the
until
no
end of the night.
tax on
Anyway.
tips is 25,000 deduction. But if you make over 300 grand on tips, it phases out if you're joint, 150 grand single if you're joint.
That was on
Tips? Well,
OnlyFans, I guess.
temporarily make up to 12,500 on overtime. So these are not unlimited so it's not no tax and overtime unlimited. It's up to a certain limit, basically. Temporarily makes auto loan interest deductible for new autos with final assembly in tax years 2025 through 2028. Deduction limited to 10,000 and phases out at a 20% rate when income exceeds 100 grand and 200 grand. I mean, all of these, like, the accounting and financial practices are going to be booming because it's all very confusing for most people. Estate tax, you could die and leave the first 30 million if you're married without estate tax. If you're single, the first 15 million. And then it indexes it for inflation. We're going to go a little bit more into the estate and gift rules later, but we'll kind of go back to business tax provision. So we went over personal, went over estate tax. Now we're going over business taxes. It permanently restores immediate expensing for R&D expenses. Small businesses with gross receipts of 31 million or less can retroactively expense R&D back to after 12/31/21. All other domestic R&D can accelerate remaining deductions over a 1 or 2 year period. So like, let's say you're developing a new software or developing a new AI bot, bam, you can expense that. That's a big win for R&D and tech. Then you get to permanently reinstate the EBITDA-based limitation on business net interest deductions, and you get to permanently restore 100% bonus depreciation for short-lived investments. That is massive. Bonus depreciation allows you to deduct a larger portion of the short-lived investments in new tech, equipment, even a building for your business. So like if you buy a building for your business, we might, just rent this building out totally, Jim, according to this new law, buy another building for our business, and it's 100% write-off. Isn't that crazy? So we're moving.
We're moving. Hey, Rich, get the truck, we're moving.
Get the truck. Although,
truck's
allowing-
backing up, baby.
Allowing businesses to write off. So the new addition, I
Yeah.
think that's 100% bonus depreciation.
Yeah,
according
because
to
you're doing
this.
it this year.
Allowing businesses to write off more investments partially alleviates a bias in the tax code and incentivizes companies to invest more, which in the long run raises worker productivity, boosts wages, and creates more jobs. But where are the guys, Jim?
Okay.
Where are the workers? Waiting on red tape, I guess.
Yeah.
For those of you who don't know, we're expanding. Come see us at our corporate headquarters at 888-988-JOSH, and you get to hear the guys banging while we're meeting now.
A lot of Excedrin
We'll
I've been
get you,
taking.
we'll get you in a quiet room, maybe with rubber walls. No, but for real, if you want to meet with us, we are meeting with people live round the clock, trying to decipher this new tax bill to see how they can take advantage of it. Like if you buy a copy, boom, 100% write-off. So it'll really allow you to do more stuff yourself. Like, so we have those people who like mail houses. We're hiring for mail. We did a seminar. We mailed out postcards. We may want to start mailing it out ourselves. So buy a high-end,
Yeah.
copier.
No, I think Jim's. We'll just give Jim the
Another
envelopes, the envelopes
Another hat.
and a sponge.
And this,
The envelope and a sponge.
Yeah.
Be in the corner.
I've done that
How many
years
job-
ago.
how many job titles?
I don't know.
We're a small business. We can't-
Envelope
We're
licker.
helping.
Josh, I want to be an envelope licker.
Wasn't
And
there a
he gets
Seinfeld about
paid
that?
by tips
Yeah, she
only.
died.
And the
Tips
died.
only.
George's wife to be.
Yeah. I never, by the way, I never liked her
No.
or I thought it was a bad character.
Yeah.
I liked when.
I think her parents were better than she was.
Yes. Her parents were nuts.
But
The
I
father was nuts.
didn't think she was a great character. Like,
The best episode when it was George was continuing on how rich he was, and he took them to drive out to
The burning.
the expensive beach place in New York. that he
Martha's
said-
Vineyard?
Yeah, Martha's Vineyard.
the Hamptons.
They were playing along. How long you gotta play along with me? Until we wanted to see how it unfolded.
Great show.
show.
I mean, the
Anyway,
best was
Is that a
George's-
write-off? Netflix?
George's parents were better
George's
than.
parents should have had a show.
Yeah, they were. That was really sad. Because was it Ben Stiller? Or?
Yeah,
Yeah,
Ben
Ben
Stiller's
Stiller.
father, Jerry.
So Jerry Stiller should have had his own show on the couple. They were good.
George, you know anything? I got you an interview. You're gonna be a bra salesman. You know anything about bras? You got the A, you got the B, you got the C, and then you got the largest, the D. That I know about bras.
That was a good
And
episode.
he-
So,
And his mother went in to get one.
but Jerry was Jerry Stiller was a great character. So and speaking of the Stillers, guess what? Where Ben Stiller lives in
Jersey?
Hawaii, also gets a tax break.
Never got a dinner.
There you go.
Jerry still.
So temporarily, so you got 100% bonus depreciation for short-lived equipment and 100% expensing of qualifying structures with the beginning of construction occurring after January 19th.
Yay!
We did it.
We did it.
2025 and before January 19th, 2029 and placed in service before January 1, 2031. So I think we can get 100% expensing on the new. Makes the section 199A. So, okay, we have a studio right now. Studio's big, massive. Kind of reminds me of those, like a shoebox. We're getting a whole new studio. It's going to be awesome. That can be expensed. Makes the section 199A. So, okay, people bellyache about this bill, and I'm fine if you're against the national debt. I hate the debt increasing.
But isn't the
But this is massive for business.
isn't the tariffs gonna offset the debt?
Supposed to.
That's what they say. We'll
How
see.
much did he bring in?
We'll see. Nobody knows yet. Tom knows. Tom,
Tom,
get the
Statistic. How much?
statistic. How much has the revenue from the
tariffs.
tariffs brought in?
And where's
to
my
fund
check?
this?
Where's my check?
I want the check. We're not getting the check.
My
get
check
nothing.
from Doge.
Oh,
You're
gods.
getting nothing. You're not getting the Doge check. I would just be happy if the Doge money just gets returned to retire the debt.
Yeah.
I'm fine. Permanently restores 100% expensive qualifying structures with the beginning of construction. So this is what I'm saying. You get 100% bonus depreciation, right? Expensing. So if you buy solar panels, you get the Biden energy credits if it's done in this year, not next year. And you get the 100% expensing. Could be powerful. Until they listen to the show and then they pass an amendment and say, oh, it won't happen. Makes the section 199A pass-through deduction permanent. It increases the phase-in limitation and creates a minimum deduction of $400 for taxpayers with $1,000 more of qualified business income for material participants. Basically, if you're a small business owner, you get up to a 23% write-off on your business income. Unless financial advice, I don't think counts. Isn't that crazy?
Fine.
So certain aspects of this bill benefit some industries like real estate, which Trump is from, penalizes others, which he didn't like. People say he didn't like, back from his Page 6 days in New York, when he used to wine and dine, he didn't like the Wall Street brokers. So maybe that's why. According to the CBO, tariff revenues are projected to total $872 billion, which represents about 1% of total revenue. Additionally, in a separate analysis of tariff increases, the CBO estimated that these changes would reduce deficits by $2.8 trillion over the period, which might help with the big beautiful bill being permanent. There are hydrogen production credits. Deduction for energy efficient commercial buildings and hydrogen are repealed. It extends the clean fuel production credit until 2030. It eliminates the clean electricity production credit, investment credit for projects placed in service after 2027, right? Except for base load power sources such as nuclear, hydropower, geothermal, and battery. It introduces restrictions related to foreign entities of concern and adds an excise tax for wind and solar projects related to content thresholds. So it's a lot, but basically saying some of the clean energy things are no more, but they are still encouraging nuclear, which is a good thing. There's also international tax provisions, and there's really a ton of long-winded things that I don't want to go too much into. Could be massive, but you got to know how to kind of work it in your favor. And that's what we're here for. So call us 888-988-JOSH and you get my book, Retirement Reality Check, free when you schedule and keep your no obligation review. We are on Twitter, on Spotify. If you have a question for me, just comment on the video. We will get to your questions on the One Big Beautiful Bill Act. Now we're going to go to estate planning provisions. Basically, there is no SALT deduction expansion for high net worth individuals, which this is according to Forbes yesterday. I don't know if that's true, but the legislation maintains the $10,000 cap on state and local tax deductions, a move endorsed by Senate leadership. This decision means wealthy individuals in high tax states must continue to focus on other tax planning strategies rather than relying on SALT, expanded SALT benefits. There was talk about that other significant changes, the standard deduction for seniors made permanent, adding an extra $6,000. That's a huge win for those of you looking to do Roth conversions. So there's something that we talk about called the tax triangle, which you draw a triangle. You know how to draw a triangle? Draw one line, another line, another line, 3 lines.
I went to public school.
It's 3 lines, Jim, not 4.
That's a square.
It's 3 lines, not 4.
Not 4.
And on the base of the triangle, you write nothing. On the top of the triangle, you write tax-free. On the left, you write taxed as earned. That is interest that are you paying tax on every year. 1099 INT forms, bank accounts, etc. On the other side, you write tax deferred. Those are like IRAs, annuities. That's money that you are not paying tax now, but you will down the road. But the negative is if you defer tax to a later point, right? Let's say you're deferring the tax, you're going to pay it sometime. So what you do is you convert money from taxable accounts or tax deferred accounts to never taxed accounts like a Roth. And the beauty of that is within this new bill, the first $37,500, if you're married following joint senior, you don't pay tax on. So it allows you to Roth convert $37,500 without it really making a dent in your taxes. You're still paying tax on the conversion, but it doesn't increase your bracket, called bracket creep. So there's a strategy that you could call us on called bracket filling. Just give us a call at 888-988-JOSH, and we'll help you with that. So then there's the opportunity zones, which we talked about earlier. There is the big, beautiful bill. There's just so much in the bill. If we look at the final bill, I'm going to talk about the SALT. The big surprise, folks, massive surprise for everybody, was the state and local tax. So I'm going to go to the exact text of the bill to read this. So if you go to state and local, right? Tom, you can't on Adobe, you can't index it. I'm doing Control F, and it didn't show me it just showed me one spot. And then I'm going to the X, and it's doing state and local. It's kind of confusing. It's not really doing a good job, the indexing. I thought regular Adobe was better. Here we go. But I see it now. The limitation on individual deductions for certain state and local taxes. So by striking 10,000 and inserting the applicable limitation amount, section 164B is amended. But here it says 40,000. So I don't know who's right. The estate planning guide, I think it's the 40,000. And then there is a threshold where I think that estate, see, this is why a lot of what you read is wrong, right? Like, I read this article from Forbes that Tommy Boy sent me called Forbes.com, the Estate Planning and the Final OBA, One Big Beautiful Bill Act, Key Changes High Net Worth Individuals Must Know, from Matthew Erskine. And he says, no SALT deduction expansion for high net worth households. And here it says right here very plainly, it says by striking 10,000 and inserting the applicable limitation amount, half the applicable in case filing a separate return, in general, for the purposes of paragraph, the term applicable limitation means in any taxable year beginning 40,000, 2026, 40,400. In the case of any taxable year beginning after calendar year 2026 and before 2030, 101% of the dollar amount in effect under this subparagraph for taxable years beginning in the preceding calendar year. I mean, who writes these things? Write them in plain English. It's a 900-page bill. In the case of any year after calendar year 2029. So does that mean in 2030 and thereafter? Right, Jim? It's like, just make it simpler. Phase down based on modified adjusted gross income. Except as provided, in the case of any taxable year beginning before January 1, 2030, like, right? It's just confusing. The applicable limitation amount shall be reduced by 30% of the excess of the taxpayer's modified adjusted gross income over the threshold amount. This threshold amount is 500 grand. So I was right in my first statement. So it's not that high income households get excluded. It's you have to work the system. You know, you got to understand the applicable limits of the law. So let's say your company makes $1 million after expenses. Bring home $1 million. If you make 501, you don't get it. You don't get this deduction. So what are people going to do? They're going to give 1 or 2%, you know, to their employees or something, or to a trust. So they make $499, so they get the write-off, something like that. That's what's going to happen. Am I wrong? It's always what happens. Or they buy a trust. They create a trust. The trust owns certain percentages of their business, so the profit is less. So there's a limitation on the reduction. The limitation is the reduction under Clause 1 shall not result in the applicable limitation of being less than 10,000. Modified adjusted gross income for purposes of this paragraph means adjusted gross income increased by any amount excluded from gross income. So there's, I did a show called The Gift of the Magi. Remember that?
Yeah.
And Magi stands for modified adjusted gross income, not the three wise men. And Magi is how Roth is calculated. And all these things are confusing. So rather than resulted on adjusted gross income, which everybody knows, right? They resulted on modified adjusted gross income, which no one knows. So the general Magi calculation, how to calculate your Magi, according to the IRS, is you start with your AGI and you add IRA contributions, you add student loan interest, you add foreign earned income housing exclusion, foreign housing, savings bonds, and adoption benefits. So your Magi is your income before those deductions. And then There's a whole section on the IRS.gov. How is Magi calculated for IRAs? How is Magi? But so make the Magi work for you, right, Jim?
Yep.
Right, Rich? So,
You know what the answer is? A flat tax, maybe.
yeah, flat tax is the way to go. However, our brain trust keeps going. Now we have 50 key provisions in the new bill.
You think Tony's head's gonna explode?
Tom just keeps them coming. There's still an EV tax credit of $7,500 for U.S. made vehicles, according to this. But some of this is AI generated. I don't know if I trust it. I just heard they were removed. So is the EV tax credit removed? Might be removed for all vehicles, but you get to keep it for U.S. made.
Know that. It's maybe.
I think it's made, parts of it's made.
No, they make a lot of Teslas in the U.S. And most,
But
you know,
what if you go for a Nissan or something like that?
you're screwed. Don't buy a Nissan.
American made, baby.
Has to be like Ford.
So the one big beautiful bill and you, here are 50 key provisions. This is crazy. Lower individual tax rates, expanded tax brackets. I'm going to go quick here. Higher standard deduction, elimination of permanent personal exemptions. Remember the old standard exemption? It's done. Either get married or single. Expanded child tax credit, higher estate and gift tax exemptions, AMT relief. But this is where the AI is wrong. It's not over 13 million per person, it's 15 million. AMT relief. The 20% qualified business income deduction is made permanent. I have so many of my clients who don't take advantage of this. What that means is if you are an independent contractor or an LLC and you make, let's say, 100 grand, the first 23 grand is non-taxable to you in addition to the other standard deductions. So if you made 100 grand and you're married, you get 31,500 plus the 23 grand. So you're not paying tax on like 50 grand. It's massive. Which is, I guess, why the budget hawks don't like it, because they're not getting any tax revenue. Auto loan interest deduction, qualified tip income deduction, a senior deduction, the expanded SALT cap, home office deduction, student loan interest deduction, educator expense deduction, charitable deduction, health savings accounts contribution limits, flexible spending accounts, mortgage interest deduction. So you could, within this rule, if you're an LLC or something, you or a sole proprietor or a 1099, you get 100 grand. You could put like so much in the HSA, so much in your IRA. You could make it so you pay tax on like 30 grand on 100 grand of income. Isn't that crazy?
It is.
Now, before I get people go, oh, Josh, you're making this up. No. Think about it. If you make 100, just do the math. I'm going to break out my trusty old calculator. And let's say, what's the 401k deduction? Like 30,000, 31,000? So let's say you're over 50 and you put, I don't know, 31,000 in your 401k. That's 69 grand right there. You got a 23 grand deduction because the 23%, that's 46. You made 31,500 as the marital deduction. That's 14,500. You're making 100 grand, you're paying tax on 14 grand. Isn't that crazy?
That's crazy.
Now you got to live on like 30 grand in this illustration. But if you're somebody who says, you know what, life hasn't worked out for me. I'm 55 and I have nothing saved for retirement. You get an LLC. You do what I just said. You sock away 31,500 for the next 10 years. That's 310 grand plus interest Only in America, right?
America, baby.
What about Michael Jackson? Only in America? I'm not going to say it, but anyway, 31,500. And then you can do the HSA, get a deduction on your health care. Massive benefits for you, the listener, and the viewer at home. Share this with a friend, like and subscribe. Tell everybody to download my podcast, The Financial Quarterback, on Apple and Spotify. And if you like what you're hearing, want your own personal review, call me 888-988-JOSH, 888-988-5674. I got more. We got 50 things. We went through 20 things. 21, mortgage interest deduction. 22, capital gains exclusion on the home. 23, first-time home buyer savings account. 24, rental income reporting threshold. What that means is, like, if you make like $3,000 renting out your home, you don't have to report it. It's like the kind of the Airbnb. Energy efficient home improvement credit. 529 plan expansion covers apprenticeship and student loan repayment. Dependent FSA limit increased. Adoption credits made refundable. Child care tax credits. Education savings tax credits. Those help you for family and education. For retirement and seniors, you get an expanded catch-up contribution where you put more into your 401k. Number 32, RMD age. Number 33, savers credit, converted to a government match. 34, Social Security tax exclusion, expanded for higher income earners. Medicare premium deduction, above the line for all retirees. Work and business, you get a remote work tax credit. You get a gig worker income exclusion. You get a business meal deduction. You get to write off 100% of your business meals through only
Whoa.
2026.
Jim does
Oh,
that
wait a
now.
minute
So
now.
Jim,
Wait
does
a minute,
that
we gotta
now.
write these off.
So Jim, when you do your business meals, you know, you go to the Ground Round or
Ground Round.
ShopRite for your $4.99 meatloaf.
There you go.
Got to
I gotta bring
keep
the
your
receipt in.
receipts. Home-based business deduction, then a startup expense deduction increased to 15 grand. Then you get the EV tax credit, you get the solar tax credit, you get the energy efficient appliance credit, 300 per item. Public transit commuter benefit, IRS audit shield, 3 year of statute limitations reaffirmed because the IRS, they can't go back 7 years. They got to go back 3. Crypto tax reporting threshold raised to 10 grand. Capital gains holding period, 1 year remains for long-term capital gains tax treatment. The Taxpayer Bill of Rights codified into law. The IRS just can't jerk you around. Alternative minimum tax index for inflation. And then inflation indexing applied to more credits and deduction. That's something like on the Social Security tax, they never added an inflation adjustment. I believe they're trying to do that now. So there are so many benefits. We just went through 50 quick ones. So I want to thank you all for joining us on Twitter, YouTube. Be sure to like and subscribe. And call my office, 888-988-JOSH, for your free book, Retirement Reality Check, when you schedule and keep your no-obligation review. We will give you a free 45-minute tax income. It's called the One Big Beautiful Game Plan. The One Big Beautiful Bill Game Plan. OBA. After these messages, we'll be back. 888-988-JOSH, 888-988-JOSH. Okay, you can end the Twitter and the YouTube, and then we'll do more in a few minutes. We'll round out after we